Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hope you're having a good day out there. We're financial advisors here at Jazz Wealth. We focus on investing for clients for retirement, for long-term investments, things like that. We use our own portfolios. You can see right on our website there. Hope you'll check it out. We got a lot of great things coming for customers. We're also a teaching advisor, so we like to teach as referenced to this class that we're about to do here. We always like to give you updates, teach you how things are happening. We do weekly classes for customers, etc. We're going to just dive in today, get right down to the goods, and we'll go from there. I'll kind of wrap up everything here, and I'll see if I can take some questions if you happen to have any, and we'll see what the day has there. Hey, the markets were higher today. You can see on the right-hand side of your screen there, you've got all the markets basically positive on the day. The Dow was a lagger by just a little bit. The Russell, the outperformer. S&P up 1%, NASDAQ up 1.35%. That trend continues where when we have an up day, the NASDAQ leads, the FANG tech names. When we have a down day, NASDAQ leads as well. So you've got that sort of going on overall. The Fed comes out with their rate decision today and left rates unchanged, which is actually not that uncommon. We look back, actually since 1994, 70% of the time the Fed doesn't do anything. They don't leave rates. They just leave rates as they are. They don't cut, they don't raise them. So very uncommon for them to be doing rate changes. However, if you're participating in the markets over the last 5 to 10 years, you feel like rate changes are more popular since they've been on the decline there. But anyways, not normal there. We'll start with our normal top-down analysis and do as we do. We do this every day. We start with the major indices. We go down to sectors. We go into individual stocks. And today we're going to do something a little bit different for you guys as well. So going over the charts here, let's take a look. Like I said, the Russell 2000 was the best performer of the day. So the Russell 2000 is hovering just above the 200-day moving average, trying to get some work done there. The S&P, obviously very strong. You're participating in that. If you saw that today, the S&P was one of the leading sectors on the day, looking pretty good there. That's going to be because of Apple, Microsoft. They all got a nice little bounce. Apple 2%, Microsoft in the mix there, one of the bigger contributors, up 1% on the day. But I do want to point out Limited Brands. Holy cow. This is the parent company of Victoria's Secret, Bath & Body Works. Well, you can obviously see everything looking good there. They're going to get back to talking about spinning off Bath & Body Works. Been a long time coming. They've been talking about it. They put it off during the virus sort of thing. Well, today they said, hey, we're going to get back to that. We're going to start talking about that again. And Limited Brands did great as well. One other thing I want to point out, a couple others. You got C.H. Robinson, transport company here, hitting new 52-week highs, 10% gain on the day. And you can't ignore AMD. AMD up 12.5%. On earnings. We talked about that yesterday there. Those were some of the really strong ones. What's interesting is that's spread over a couple different sectors. You got obviously tech, semiconductors. You've got C.H. Robinson, transportation, Limited Brands, retail, although it's sort of a one-off day for them. Not bad. You got a nice diverse mix, meaning you got a reason for the markets to move together versus it all just being tech stocks. So something to point out. Speaking of tech stocks there, your NASDAQ best performer today continues to chop around near the high. Guess who was the leaders today? Yeah, it's going to be Apple. Amazon, they were testifying up there at Capitol Hill, but not up there. They were all doing it remotely and everything like that. So you got those names. Microsoft kind of helping lead the way there. The broad contributors to the mix there, the big contributors to the mix. But I do want to point out a couple names that stuck out. DocuSign headed back to new highs there. They're killing it, looking good. Of course, AMD will be in the mix there as well. And PayPal, which happens to be one that we own here at Jazz Wealth, hitting new 52-week highs, almost up about 5%. A lot of the other ones had very respectable days. It's not that I'm putting down any other NASDAQ stock. It's just these kind of stood out for the day, and I like to point out things that stand out versus just reviewing everything. I mean, anybody could do that. Biotech was the weak area of NASDAQ today. If you look through any of the biotech names, a little bit of a down day. They got a lot of support generally across that subcategory, and you can see the biotech ETF here or that industry right at the 50-day moving average. So not looking too bad there. I'll give you a stimulus update real quick. Democrats are demanding that the $600 a week in unemployment insurance stay. They don't want to see that go. Republicans have a different view. Democrats said that's a red line for them. So it sounds like a bit of a tug of war. However, they're agreeing on a lot of stuff right now. The media won't put it that way, but a lot of little things they're agreeing on. It's going to come down to about 3 things overall. I would say pick it up, fellas, right? Because the unemployment insurance technically expired already, and a lot of people didn't even get it. So if that's what they're going to argue about, you might want to pick up the argument there just a little bit. Hey, in our watch list segment today, we're going to do something completely different. I promise you, you've never seen before ever in your lifetime as far as how to scan through stocks, looking at the market, breaking it down into little buckets. But before we do that, I will tease you with that information. We'll go to the bottom right-hand corner of your page, our FinTips videos. If you take a look, we did 4 retirement mistakes that can really hurt you when you retire. So just kind of general help there. But we went into some specifics to show you how to work on those things. RMDs were today. It's not going to be a popular video, but if you want to learn a little bit about RMDs, those are very important, especially in inherited accounts and things like that. You may want to check that one out. And then Friday, the CARES Act expires, so we're going to talk about the CARES Act expiring as it relates to your student loans, so something to check out if you're interested. Also, in our research section, we're focusing on how to find stocks in different areas, how to find earnings-related stocks, really trying to teach rather than just say, hey, these are 5 stocks you want to look at, right? I want to show you how we come to those examples, how you can do your research and start really refining hopefully refining your process. Anyway, so that's in the research section, jazzwealth.com/research. And very soon, I'll be doing a live stream, probably over the weekend. I don't know about this weekend, but I'm going to do a live stream about the research section. I'm going to just give away like a whole process. We'll do a whole topic and show you all about that. So that's coming up. If you see us pop up in the middle of the weekend, that'll be me. All right, so that's the major indices. Let's go on over to the sectors, blast through this, and tell you what we got, because everything is green on the day. You can see the color coded off there, very conveniently letting you know everything was positive on the day, every single sector. A couple things I want to point out. If you look at financials, finally waking up there. It was a better performing area today. It was the best performing sector out of all of them that we have on the screen there, which is all of them plus one. Who'd we put in there? We put something else in there just to make it even. I can't spot it. But anyways, one of the leaders, the leader today, a couple stocks that stick out. JP Morgan, old favorite there, moving back up to highs. It's been chopping around, but today's a really solid day overall. If you're looking at the bank stocks, Bank of America is going to grab your attention too just a little bit. Bank of America said they're going to keep their dividend. And in fact, what it made us do is take a look around and say, well, they can't be the only one. Has anybody said that they're going to keep their dividend and just laid that argument to rest? Or has anybody actually raised their dividends or said that they're going to raise their dividends? Here you go. You ready for this? You got Bank of America keeping their dividend as is. Others that said they're going to keep the dividend, Sherwin-Williams. Obviously, they've done well. They have no reason to cut the dividend. Citigroup, by the way. They're going to leave their dividends. McDonald's, if you own McDonald's, they're going to leave it. Nothing to worry about there. And Johnson & Johnson said that they are also going to leave it. There were a couple names that said they're going to raise their dividend. We did a whole scan for this today, so this is everything that we could find. Hershey's is going to be raising their dividends if they haven't already. Skyworks, surprisingly, going to be raising their dividends as well. And good old Smuckers. SJM is a ticker symbol. They are going to increase their dividends as well. I know a lot of you care about that. You're looking for that, so something I wanted to point out. Back to the financials. You got MSCI, great day for them, about 2% gain on the day. S&P Global, we happen to own that one here at Jazz. We're happy with that, up 3.5%, hitting new 52-week highs. The excitement continues to be mostly in the exchanges, as I've pointed out numerous times. Break the financials into categories and you'll find the exchanges are doing better than most every other stock there. Healthcare in the news again, looking good, almost back to 52-week highs. That was one of your leaders today, as you can see, up about 1% on the day, largely because of Anthem's earnings. Anthem came out with earnings up 6% on the day, and that really kicked off the rally in some of the other names. Your United Healthcare, one of them there, Abbott Labs, new 52-week highs. So often when you find that there's one stock that did well on earnings or some big news, you're going to find that the others move in sympathy. So those 3 stocks were the biggest contributors in the healthcare sector today. Energy higher on the day, broad rally, right? You got oil higher on the day. We'll cover that in a second, but that helped. Broad rally, tough area to be invested in right now. I also noticed that Chevron was not as strong. Late in the day, it started to rally. And then ExxonMobil, it just kind of like sluggishly got going. So if you own those stocks, a little bit of a warning sign there. Hopefully that goes away and not a big deal. Phillips 66 stands out as one of the better performers there. And Marathon Petroleum, there you go. There's the other one, about 5%. Maybe something you want to take a look at if you're in that space. Very tough place to be looking. I meant to type XLI. This is your industrials. Remember our watch list from yesterday? We talked about industrials. If it wakes up, where do you want to be looking? So we actually pointed out a whole bunch of different stocks to look at and ones to avoid as well. If you look at something like UPS, that was one of the ones you want to look at. Look at how today, when the sector itself woke up, you've got UPS doing quite well, actually. And then naturally CHRW, that's going to be earnings related, but our upgrade for CHRW. But anyways, the lesson from yesterday really helping out today. I thought that was pretty cool. Not a sector, but if you look at retail hitting new highs as well, that's going to be because limited brands, for the most part, they're by far the best gainer. You know, like I said, the Bath & Body Works thing, they got a slew of upgrades today because of that. A couple that stick out here, this Stamps.com. If you're one of our customers, you know we've owned this through thick and thin. And now we're getting a little bit of that thick for dealing with a little bit of the thin. Let's put it that way. This was not an easy one to own for a while, especially after their deal with the USPS fell through, but more than recovering. It's now up 405% since we added it to our portfolio, but this was not an easy one. So in no way do let me make you feel like we have 400% winners all the time without giving you some grief. This one gave us some grief. I'll be happy when that one's done. Anyways, you got gold higher on the day again, up $9, 1953 on the day, even further in the after hours session. Here's something. You all, what are you, Robinhood people? You got all your Robinhood people up there. They actually released data up to the minute, so you can track all this stuff. And officially today, the number of Robinhood users, accounts that have been buying the GLD over the last 30 days is up 100%. So y'all out there chasing some gold, and it's going well. You can't argue with it, right? Anyways, moving on to oil, a little bit higher today, about 0.5%, 41.27 is where it finished because of the crude oil inventories. A draw of 10 million barrels week over week is the reason why you see that action there, and a little spike in the energy sector. All right, let's go to some new highs, new lows for you real quick. Notable new highs on the day. You actually had 39 new highs. Kind of interesting again today with the consumer staples. They were kind of in the mix. We focused on those yesterday, so I'm going to move on today. Focus on some others. S&P Global, I've already mentioned that one. PayPal, mentioned that one as well. Lowe's outperforming Home Depot, which is not normal. If you're a pairs trader, that's something to take a look at. Home Depot, Lowe's pairs trade. Can't tell you what to do with it legally, but that is interesting because that's an odd time right now for that one. So Lowe's beating Home Depot by 3% year to date, which is not normal. That's all I can say there. It's not normal. Expeditors hitting new highs there. Obviously really good. Great day for them. 52-week high, and I think they are going to be bringing a higher dividend as well. I feel like that was on the list. And AMD, you just can't argue with that strength. Normally you would say, as I mentioned a minute ago, when a stock has earnings and they do really well, you see other stocks move in sympathy. Here's an example of one that's not. Intel is taking the other end of AMD's trades. People are fastly moving from Intel over to AMD. You can see it there, just a rapid move overall. Anyways, those are a couple notable new highs on the list. There were no new 52-week lows. Actually, and it's been some time since we've had any 52-week lows, which, not complaining, right? It's something you don't want to have. So, here we go. We're going to go over to a watch list. You ready? Check this out. We're going to do something really different. Hang with me. I'm going to explain it. If you have questions, we can go after this later. But I really wanted to, we spent the first couple days of the week doing some basic scans for stuff. I'm going to go really over the top here and just hit you with it and see what you think. You see the names on the list there. How did we come up with those names? Here we go. All right. Just say it right, Dustin. Here we go. So, in our notes from Jazz email this weekend, I included this chart. This is sort of referencing what we've talked about here on the closing beat. Since the virus low, you remember we were going left and right saying healthcare is leading. It's one of the reasons the market's moving higher. Isn't that interesting? Virus this, virus that, right? So through this first part, we actually measured it, and I crudely drew a little line to show you. That is what led the markets higher. Tech as well, but you largely had healthcare and that really quick reversal in energy, because if you remember, the price of oil actually had a negative value for a minute there, and so oil going back to worth something and then recovering is what gave you the first part of this rally. The low over here is the virus low, the March 23rd low. Then all of a sudden healthcare took a break. It just kind of faded away, right? Tech took a break. Energy has yet to wake back up, and financials kicked in. So we had that conversation. You can't have a solid rally without the financials. They somehow came along and did their thing. Industrials did well also. Then you remember, you might know now, financials are quiet mostly, right? Midterm. Industrials are quiet. We just did that lesson yesterday. So what's moved the markets higher? You remember it's more recently. Every day it seems to be NASDAQ, Netflix, Amazon, Microsoft, Google, things like that. So that took us to this point. But now those stocks are not, they're all at highs, but they're chopping around. So the question is, what's going to lead us going further? There's a couple ways to look at it, not the only ways to look at it. What you can do is take the S&P 500, break them into groups of 50. We call them deciles. Actually, that's not my word. You guys know that. Break them into deciles, which are groups of 50, and then attaching some sort of metric to it to say, show me the 50 stocks that have the best dividend. Rank them all the way to the 50 stocks that either have no dividend or just cut them all together or pay very little dividend. So you're ranking them here. So we'll start with that. What we did is took the S&P 500, broke them into deciles. On the far left, number 1 would be stocks that pay high dividends. All the way to 10 would be stocks that pay little to no dividends at all. Now, this is a time period that is the blue area right here. So what we're saying is we want to see where were the best performing stocks relative to their dividend yield during this time right here. So what you have is, we'll start with the worst ones. The worst performing stocks on average were the 50 stocks that pay the highest dividend yield and actually kept it during that rally there, right? So you've got that. If you owned any stocks that were the top 50 dividend paying stocks, you lost money. Your average decline is 18%, right? 18.5%. If you owned any of the top 100 stocks, meaning number 2 now, we're going from 50, adding that one in as well, then you also saw a decline. In fact, if you were not participating in the tech FANG sort of rally there and you were a dividend investor, you got ripped off, right? You just didn't get your gain during that time period. So what we wanted to do was measure all of this versus what's happening now in the markets over the last 9 days, which includes today. So what we did is we said, okay, that's what it looked like. What's it look like now? Wouldn't you look at that? All the money has shifted towards the dividend stocks, meaning the stocks that pay the highest dividends, 1 through 5-ish, right in there somewhere, and the stock's performance has been very poor for stocks that don't pay much dividends. Think of the big tech names, right? They're growth stocks. They don't pay dividends. Look at their performance. Number 10, number 9, number 8. That's that group of stocks in there because, they don't pay very much in dividends. And so they haven't performed that well. Not bad. It's just they've been chopping around. So take a look. If you go through and you say like, all right, how about Microsoft, right? You look at stocks like this, it's not that they did bad, they just haven't performed well over the last 9 days. If you take a look at something like a Netflix, over the last 9 days, okay, it may be a little bit worse, but it hasn't done a whole lot. That's exactly what you're seeing on the chart here over in 8, 9, and 10. So the money's moved into high dividend. Every day I've been pointing out consumer staples. What? Consumer staples, kind of interesting. Money's going to consumer staples. I did not know this information at that time, but now this is kind of proof. Consumer staples, slower growers, higher dividend yield stocks, they tend to keep their dividends and they don't end up cutting them. So that's one way to take a look at it. It's super geeky, I understand, but you probably want to know stocks, right? You want to know some individual stocks. So let's take it a step further. We're going to say performance-wise, keep the same decile type analysis here. Hopefully your eyes aren't glossing over, right? Keep the same analysis, but let's now look at stocks that had the best performance versus the worst performance. So what we did is we said, okay, during this whole entire rally, from the lows down here to just about 9 days ago, right? This entire move, we want to bucketize the S&P 500 into those that did not rally very much, all the way to those that have rallied the most. So this is what this looks like over here. So from the virus low to the beginning of the tech rally, the blue area that we were just talking about, the stocks, they're ranked in order there. Number 1, those are the worst 50 stocks that have rallied the least, right, year to date. So in fact, what you would be looking at is from the virus low to the blue area, the bottom performing stocks, the bottom 50 performing stocks are still down 17% year to date on average. The bottom 100 stocks, right, taking in number 2 there, they're still down about 8% year to date. Who's doing the best? The stocks that rallied the most leading up to the blue area, the tech rally, that's these guys here. That's going to be your Microsoft FANG names and things like that. So those that have performed the best from those lows and those that performed the worst, now what we want to do is say, well, how are they doing lately? What's like the last 9, 10 days looking like? Well, what you can see is those that performed the worst are still performing the worst. They haven't bounced. Your Carnival Cruise, the stocks that are still down near those virus lows, they really haven't bounced on average. You're still down over the last 9 days, minus 1%. Where's all the action? Where's all the money going? It's in the top performers, right? Looking over here, the top performers are continuing to be the top performers. It's not amazing, but it's only a 9-day period, right? So this is kind of our question period. What I want to point out today, which is the reason for the watch list, look here. All of a sudden, some of the stocks that didn't perform as well are waking up and performing. What does that tell you? So nobody wants to buy these stocks here, which I would highly suggest are the airlines, cruise lines, hotel companies that haven't really bounced, right? But they are interested in discounts. Investors lately, over the last 9 days, are interested in discounts. They just don't want the garbage discounts. So what you're seeing on the charts is I'm either going for the stocks that have performed the best, or I'm going to go for some discounts. I'm hunting for a good deal, but I need something. I need some kind of promise that it's a temporary glitch. Their earnings are over and now they're slowly recovering. Look at that. That's kind of interesting right there. So what I did to wrap this thing up, this is a lot more than I thought I was going to say. To wrap this thing up, let's look at this decile and this one, because those are discounts. If you like to buy discounts, you very quickly are able to see something's going on here. Let's go find some interesting stocks. So what I did is I sort of just picked out randomly the best performers. Not randomly, I picked the best ones that had the best performance over the last 9 days in the 3rd decile and the 4th decile. Oh my God. Is anybody still watching? Is it? Y'all are still here. All right, hang in there. We're almost there. So what I wanted to do is give you a list of stocks to look at. That's the bottom line. So if you dive into these stocks here, you're going to find what we're kind of talking about, right? So you've got stocks that they're not the worst performers. They did rally a little off their lows, still discounted, but they've recently woken up. And so these are the stocks up here. You've got your Lockheed Martin, Capital One. What I found interesting is you got a lot of different sectors to choose from, and that's what I was trying to offer today, was if you were interested in REITs or communication services, you had a choice, right? Verizon sticks out a little bit, also in the dividend category as well. In the 4th decile, which is a little bit better performers, you can see right here, from the low, they've performed better than the 3rd decile, which would have performed better than the 2nd and the 1st. But you can also see 9-day returns looking really, really good there. Under Armour, Global Payments sticks out. Duke Realty is one that's been doing real well, at least recently here. And so you've got a list now, and you have a reason to look at the list. That's what I was trying to offer, was not just throw a list out there to you like every other person. They just say, this is a hot stock. All right, but teach me why. Teach me how in the future I could do research, maybe not as geeky as this, but I could do some research and figure out why. And so that's what we wanted to offer there for you. That's all I have for that. I will move on now. You can pause it, replay it, do all that great stuff. Let's do stocks in the news and we'll get out of your way here. So stocks in the news today, AMD, that's going to be all earnings. We've talked about that already. You know what's going on with AMD. Great performance day. Guidance was the focus. They guided 40% higher than what the analysts were expecting. 40% higher, so you can understand what's going on there. Starbucks, decent day, about 3.7%. Not bad considering sales were down over 40%, but that was better than expected. They lost 45 cents a share. 46 cents a share is better than the 62 expected. So although it was bad, it wasn't as bad as everybody was thinking. Stock moves higher. Boeing moving lower a little bit here today, down 2.8%. That's your drag on the Dow. That's why when we go back over to the indices, you see the Dow down just a little bit. Bigger loss than expected, supposedly planes piling up and everything. Not good for them. Dexcom, this is the best performing stock in the S&P right now, nearing 100% gain. Granted, it hasn't been in the S&P all year, but it is the best performing stock if you were just do a raw search. Like I said, up about 100% year to date. That's going to be earnings related overall. They beat by 53 cents and raised their guidance. Remember, I've been telling you, if you've been watching day by day, guidance is rare, hard to come by. So when a company reports good guidance, or they at least up their guidance there, they get some attention. Tesla, gonna want to see that one today. S&P upgraded their debt to a B+, actually, thanks to the strengthening business there. So looking good for them, or at least you're happy to hear that. And Shopify hitting new 52-week highs, 7% gain on the day. Revenues came in 40% higher than expected. In the footnotes of the earnings, they said, yeah, we realize we're doing really well. We're gonna sell $7.5 billion worth of stocks, warrants, things like that, because we're doing well and we'd like to raise some money. $7.5 billion. Here's a little tip for you. If you invest in this stock, you can't assign it a price to earnings ratio that doesn't exist. They don't have earnings. But if you look to next year, which they expect to have earnings, you are paying 1,555 times earnings. So I will once again suggest that anybody that wants to invest in a company at 1,555 times earnings, I got old Jazz here. I'm willing to accept investors that are willing to pay that multiple because that's ridiculous, right? There you go. All right, I'll take questions if you have any. Before I do that, Comcast tomorrow, Kraft Heinz reporting earnings. Oh, good. Procter & Gamble, UPS, Yum Brands, Apple, Amazon. Those will be your focus stocks, by the way. Facebook as well, Gilead, and Alphabet. Dividends coming out. You got Texas Instruments, 90 cents, Costco, 70 cents, and they recently raised it. Pfizer up 38 cents, Morgan Stanley 35, Dow DuPont 30 cents, and Pets.com 28 cents. All right, I talked enough today. Let's see what we can help you guys with and then get out of your way. Yep. What's the fate of Kodak? Yeah, if you own it and you didn't sell it, I don't want to talk to you. Not you, but I mean like anybody that owned that stock somehow along the way and you participated in that, holy cow, you sell it, right? Take your money. I'm not supposed to tell you what to do, but I don't think even anybody at the SEC would disagree. If you had like a 500+% return, come on. What are you waiting for? Apple is the tomorrow of all the companies reporting earnings. Apple has the best track record in terms of beating on earnings and revenue. I don't know whether they'll beat or not, but they do have the best track record there. Yep. Oh yeah. There you go. Love the breakdown overall today. Good. 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 It only took me forever to put together. So help me if one of you leaves a bad comment about that. It was like hours of work, right? Now, if you don't like it, you don't like it. That's fine. Wingstop up 16% on the day. Chicken wing prices, by the way, are the cheapest they've ever been because we're not really consuming a lot of chicken wings as we used to there. They saw, obviously, sales increase much better than expected. They are largely now almost 100% just pickup or delivery, right? You don't actually have to even go in the store anymore. They were already doing that though. I think 70+% of their stores, I mentioned this in a previous class, they had already prepared for all that, right? So this really doesn't affect their business all that much, and you can see the excitement in investors today. They raised their dividend, by the way. I think that was the one I was thinking of. Wingstop raised their dividend. Just want to confirm so nobody... Yeah, they raised it to 14 cents. Yep. So that's a little bit of an uptick there for you. Yep. You think China sales will help Apple's report? Well, we're going to find out, right? No sense in speculating. You got 24 hours till you find out. I love it. Well, I'm going to wrap it up there because our computer has said, yeah, that's enough, man. You've done enough. You've talked enough today. I appreciate you guys hanging out. We'll do more questions on like a Friday. We'll do like just kind of a hangout session with that as well. Yeah, I appreciate you guys hanging out. If you liked everything today, maybe keep us in mind at jazzwealth.com. We are the people that like to teach, like we did today. Like to share that stuff with you. Have a great rest of your day, and I will talk to you tomorrow.